Right. Yeah.
But yeah, I just remember, kind of diving into that and just from.
I feel like every day was a light bulb moment where something clicked, and I was like, wow, oh wow. Every single day it seemed like for the first year.
Yeah.
Well, it's so crazy because like I remember I couldn't take an application for some reason. I just could not. Like if somebody said, hey, I want to refinance, or, I've got to purchase, trying to figure out what loan this person should go into or do. I could take an application, but figuring out the program they needed to go into or what best fit their situation was the hardest thing for me.
Yeah, sure.
But once that was done, like I could get it to the closing table, the whole, like all the process, all the, getting the docs, getting the information, ordering the title, doing the stuff, all the stuff that you guys do. I could do that, but it just wasn't for me. But, I'm very thankful for that experience. And really you don't realize what it takes to be in mortgages and do lending until you've done it. Like it's a totally different animal. And
I haven't, been a real estate agent, but I'll be honest, I could not do your job. I just couldn't do it.
There's and likewise, I probably couldn't do yours either.
Yeah. So I appreciate
Numbers
you
scare
all.
me.
Well, dude, so what we kind of wanted to talk about today, bridge loans, man, bridging the gap.
Bridging the gap.
Our first episode we discussed 10 different ways that sellers in this market could navigate going from point A to point B, which is house they're in, house they're trying to get to or find. But dude, tell us a little bit about a bridge loan. Just give us like we're going to have questions, I imagine, but give us a bird's eye view of what a bridge loan is.
Probably the easiest way to describe a bridge loan, as you're saying from a bird's eye view, is it is a loan on your current property, right? Let's say you've got $100,000 in equity that you need for your new house, but now you're stuck in, buying and selling at the same time. And we all know in this market, it's just not good on paper. Most people are like, well, I've got 10 other people wanting to buy this house and they don't have to do that. So why would I accept your offer? So that is where you're saying bridge the gap comes in. It allows us to write a loan on a property that we know you're going to immediately sell, right? We're not going to make any money on it. That's okay. But we're taking the equity out of that property up to 90%. So that there's still room in there when you sell it. You can make a little money, what have you. But we are allowed to utilize those funds to transfer over to a new loan on a new property.
Okay.
And they work hand in hand with each other. Two loans. Basically, you've got your bridge on your, let's say a railroad track. It's up here, right? And then you've got your other house back here.
Yep.
They're moving at the same pace, just this one's slightly in front of it.
Okay.
So that's pretty much how it is. It allows you to buy before selling. And your offer is non-contingent.
Right.
I mean, you're just going to win out most of the time.
Yeah.
So let me ask it this way. Tony and I are discussing with clients, or, we've got somebody that calls us and says, hey, we want to sell our house and buy a new one. And, we kind of go through some preliminary questions with them to kind of figure out what's their, can they just buy because they've got funds and they can buy and have two payments, or they might just want to sell and go rent. I mean, there's a lot of different things that have to be considered when a seller comes to us and is like, hey, we want to, kind of navigate both of these. So, if they decide to utilize a bridge loan, when they make the offer on the new house, we'll just call that property B. Property A, the loan that they have on that property, does that get paid off before they close? Or kind of talk to us about how that works.
That's actually the beauty of this, is the way that I always work it up is that obviously we're gonna pay off their current mortgage, right? You're not gonna have a payment on your current mortgage or your new home, depending on when we close, for 2 months.
Okay.
Actually 2.5 months. If let's say we close at the beginning, let's say we close in August on the bridge loan and your new home, right? No payments due on any mortgages until mid-October, which gives you guys plenty of time to sell this thing before anything's due. So they have 2 months payment, basically a payment vacation, essentially.
But I mean, and you know, so and also another thing is they have to have an appraisal.
Yep.
Which
But we're doing drive-bys, super quick.
okay.
Values are there. I've had no issues on values.
Okay. Well, let me make this disclaimer. Tony, you'll appreciate this. So last year, Dustin and I did a bridge loan together. The thing that can be scary, and you have to watch this with sellers, is the house appraised for like 335 or 340, that's what their house that they currently lived in. It needed to appraise for that.
Yep.
So that obviously, raised some questions like, are we going to be able to sell this thing for 360? Like, that's not what, that kind of thing. So, I guess what I'm trying to say is don't put a lot of value in those appraisals.
I will second that.
Yeah.
Yep, I agree.
Yeah, I mean, definitely, because we sold that house for 370, 375 and then appraised.
Nice.
So that's another kind of tidbit, like appraisals are horseshit. I mean, that's the best way.
Could be. Well, I mean, you told me in the
mostly.
beginning, it's like you ask, and this is with a lot of things in life, right? But you ask 10 different people, you get 10 different opinions, kind of thing, right?
That's right. Yeah. I mean, it's one person's opinion of value.
Well, and
right?
then with the bridge too, they don't have a contract in front of them, right? So they're not seeing this golden number that they need to hit. It's just a refinance, and they're they just kind of throw something down based on comps. So they don't have this number that they feel like they need to get close to.
Yeah. Well, what is your experience as far as appraisals go? Do you are you seeing a lot of appraisals just in the market in general? Are you seeing a lot of appraisals go under, what people are offering right now? Or
I will say I saw a lot go under beginning of the year. Not by I'm talking, 5,000 maybe the most I saw, but as the year progresses with these, people buying houses over value, it's catching up. So I'm not seeing any issues with values. They're all coming in based off of previous sales that somebody buying, 20, 30K more. So I haven't had that issue in quite some time.
That's awesome.
That's good to hear. Yeah.
Yeah. So, it's taken a couple months, but
Right.
it's finally trickling forward a little bit.
Yeah. It's been so weird, man. Cause like how the way the market has moved, how adjustments have been made on writing offers, right? Because like the appraisal gap coverage that you'll see on offers now is like, sending, putting so much money for a short appraisal that'll come in 6 months ago, never would have happened, never would have seen it, And so it's interesting to hear like even that shifting is like maybe the appraisal shortage is not as big of a deal as it was 6 months ago now.
I would agree with that.
Yeah.
Well, and I think appraisers are also adjusting to the fact that the market is adjusting for the supply issue.
Sure.
You almost have to, or you're never going to, like, deals are going to fall apart constantly because not everybody can make, buyers cannot always make that. If we had a constant issue of short appraisals, most buyers cannot make up that difference. You have quite a few that can, but we'd have to, it would be very detrimental to the home buying, the market in general, if all these appraisals were coming in short and they weren't giving or assigning value to where the market is right now.
Sure.
It's not.
And I think appraisers too, even that we're all in the same weird journey of where this market is, right? But they're kind of always, last at bat. Like they're kind of the last ones to figure it out a little bit. So that's why it's taken so long for them and the values to kind of self-correct a little bit.
Yeah. Well, I was also just telling somebody this too. I don't know what the fix is or, how do we correct this, but appraisers have a lot of, what's the word? They have a lot of control over the transaction.
Power. Yeah.
A lot of power. That's the best way. Yeah. I mean, it's insane. And again, you're talking about one person. Like, I feel like if the buyer or the seller wants to pay for it, you should be able to get multiple opinions.
Right.
Well, and getting an appraiser to admit they're wrong is impossible.
That's right.
It's beyond impossible.
I think I've only had one out of like 12 short appraisals get corrected. And the listing agent did a hell of a job, but they did. They corrected the appraisal. Me, not so much. I've written like novels and like said, here, this is why this should be you know,
Maybe that could be a podcast episode in and of itself, man. Like conversations that have happened or what's happened on the backside of a short appraisal, you know, like some stories there.
you know, the podcast episode I want to do is the one that grandma's house that hasn't been updated for 30 years is not the same as the house down the street that's completely updated.
Oh gosh.
Like you can't get the same, you can't expect the same results for,
Right.
you know, if it's not in today's standards.
Yeah. Yeah.
I mean, maybe now's probably not the best way, you know, the best time to do that because we do have such a short supply, but
Right.
I mean, that drives me insane when people think that their houses are worth way more than they should be.
Right. Right.
So going back to the bridge loan, Dustin, there is an appraisal that has to be done on the purchase, correct?
On both properties, correct.
Okay.
Yeah.
All right. So is it a fee associated with both of those appraisals, or
So it's just easiest to think of both as they're completely separate.
Okay.
But they're essentially they're separate, but they're holding hands essentially.
Hmm.
So there's bridge loan, the closing cost, it's very minimal because basically most of what we're doing, it ties in with the purchase, right? So the only things that are separate are your title and your appraisal.
Okay.
So those costs.
Yeah. Which you're going to have that on
Exactly.
on any
Yeah.
of it.
Mm-hmm.
All right. So let's dive into an example here.
Sure.
I've got a $200,000 house that I own. I owe $100,000.
Mm-hmm.
I'm buying a $400,000 house. How much do I have to put down utilizing a bridge loan? Because this has changed recently.
Sure.
How much do I have to have down on that $400,000 house?
I mean, I could still do it with 3% down.
Wow. So $12,000.
Yeah. And you could pull, I mean, that 12,000, you could pull it from the bridge, pay off your old mortgage. It'll pull out enough for your closing costs, tax, insurance, what have you. And here's the other kicker that most people don't know is, let's say you need to pay off a debt to qualify for the new house, right? Or you were planning on doing it. We can do it all at once. You can take your equity out of your house instead of waiting for another month or two to sell and close, et cetera, and get your cash. We can just do it with the bridge loan.
This guy's wheels are turning.
All right. So, dude, here's the thing, man.
Hey, you're talking
Look,
his
you're stuck with a $600 car payment. It's holding you back, right, from your house that you know you're paying that.
Yeah.
We'll just knock it out. We'll pay it off right there.
So here, I'm going to ask you the same question I asked Matt when we talked about this in the first episode. Why would any wise consumer do any other loan than a bridge loan if they're trying to sell their house? You know what I'm saying? Like, is it for everybody? I know we'll get into that. But
honestly,
like, it almost sounds too good to be true.
Most people are just afraid that they're going to be stuck with that house. And then this new loan, but what I try to explain is you're paying that payment regardless, right? The bridge loan, if you ever had to make a payment, and I'll tell you an example here in a second. I've had 2 people have to do it, and I'll tell you why too. Mm-hmm. It's an interest-only payment, which is 99% of the time lower than your current house payment, right? So if you're trying to, let's say you just want to keep it and you have the cash, like you said, you know, let's say you got $60K saved up and you want to just use it to buy the new house. Well, now you're stuck with 2 house payments, right? Plus moving expenses.
Yeah.
Mm-hmm. This erases all of that. You know, even the small amount of fees to do a bridge loan that are actually wrapped into it, that, you know, not having that house payment for 2 months, that's going to pay your moving expenses. You've already made that back. Sure. So my only advice about bridge loans when not to do them is holidays. Thanksgiving and Christmas. That is the 2 times I've had people actually they both had to make 2 payments because they were selling right during the, you know, it's right. You know, it's tough to move during Thanksgiving and Christmas. So they unfortunately chose a tough time to do it, but that is the only 2 people that have ever done. I've probably done 70-ish bridge loans. Wow. Yeah.
Wow. Yeah. And have you seen them be more common this year or end of last year, like in the market that we're in?
Yes. Fortunate for me, I've been doing them for a while. Sure. So, but they are becoming extremely common. Like it's when I mention it, somebody's like, "Oh yeah, I've actually heard of that. I don't know a lot about it. I've Googled it once or twice." Sure. But as you know, 2 years ago, nobody knew what I was talking about. I was speaking a complete different language.
Interesting.
Yeah.
Well, they're definitely more favorable for the consumer in the environment that we're in versus a slower environment because In a slower environment, you may have a house that sits on the market for 3 to 4 months before you sell it. So essentially 6 months from start to finish on selling your home.
Right.
But to his point, the interest payment on that is smaller than probably your original payment. So
Well,
you're not stuck with 2 payments. Which
and
is
here's
a lot
another
of
good
people are
example.
scared
Let's
of.
say you've got somebody that's been in this house 20 years, right?
Yeah.
And it's just there's stuff everywhere. No matter how nice you make it look, right? There's just
It's 20 years of living, man.
Yeah.
Yeah.
So that allows you to move your client your new home. You sell it, you do your thing there. They get moved out in what, 2 to 3 weeks, however long it takes, maybe a month.
Sure.
Then you list it. House is beautiful, clean, no clutter.
Yeah.
It helps you guys move, and it also, I feel like, helps you not have maybe this potential roller coaster of when deals close, right? You've got this one, you already know this one's coming right behind it, right? Maybe it helps ease the stress of a younger agent who doesn't have the network built up. They can count on that extra deal behind the fact of when they close the new one.
Right.
Yeah, that's a good point. That's a really good point. So, all right, this $400,000 house we're buying.
Yep.
Obviously, this changes from lender to lender, title company to title company. But let's just say that on a traditional purchase, somebody who's just renting a house, buying this $400,000 house, the closing costs are, when we're talking about closing costs, we're talking about prepaids as well. So the taxes and insurance that you have to escrow. This seems like a big number, but it is what it is. $7,000 to $8,000 on a $400,000 house for a buyer just making an offer. They're not selling anything, not doing 2 appraisals, none of that. How much, if any, what's the difference on average that you're in that example of the cost of doing a bridge loan versus not talking about the interest only payments?
Sure.
Just the cost of acquiring the loan and getting to the closing table on the new house.
Like you said, I'll just use an example of $7,000 for closing on the $400,000 house. Like you said, prepaids, all that good stuff. Doing the bridge loan, it'll add about an estimate of $1,400 maybe on top of that, and it's rolled into the loan. It's not you're not stroking a check or anything like that. Yep.
That's not bad at all.
It's not bad.
So,
and when we close the bridge loan, right, it's always 4 days prior to the new home purchase. It's a refinance. It needs to, rescission period, and it needs to fund. We're not giving that person that check.
Right.
We immediately transfer wire it to the title company that's doing the new home closing.
Right.
So there's no,
Sure.
You don't have a buyer walking around with $100,000 check and my window was down.
It's golden sizzler.
It's gone. So
black. Put it all on black.
Right.
Yeah,
Put it all on black.
or that. Yeah, sign it over to casino.
So we have just closed on our new home using the bridge loan. The home that we live in now is owned free and clear until we sell it.
You have your bridge loan tied to that property.
Okay, so it's all tied to the house you're
Correct.
selling. Okay.
Mm-hmm.
So we close on the house that we're selling. When does and there's like so many different scenarios, but I'm just trying to, give myself and Tony just like a pretty clear example.
Sure.
So we close on the new house September 5th.
Okay.
We sell and close the original house October 5th. When does our traditional payment on the new house go into effect?
November
1st. Okay. And
that's how it works too. If you can always close a deal at the beginning of the month, you're guaranteeing no payment for 2 months.
Yeah. Well, yeah. So we close September 5th on the new house.
Yep.
We close the house we're selling anytime in October, really. We haven't made a payment from September 1st to November 1st.
Even if you sold that house that had the bridge loan in November, you still don't have to make a payment.
Yeah. That's awesome.
Yeah.
You tracking with us there, Tony?
I'm catching up, but yeah, I'm there.
Well, it's just it's a unique thing.
It's a unique product, a unique loan. And again, I'm just trying to figure out like why. Well, maybe the better question would be.
Well, I can tell you why other banks don't do them, because you don't make any money on them.
So
we're not making.
So why do you do them?
Because we're better than everyone else, honestly.
Well, I will say this: I've had some other companies I've done bridge loans with, Tony, and I think for me the communication,
sure,
and just the that kind of stuff with Dustin and Liberty Financial.
That's where it
it's
matters,
been-
man.
Oh, for sure.
Yeah, all the time, all the time.
But yeah, as far as there's a lot of people do them,
Mhm.
but a lot of people won't do them. And it could be because they don't, but some people, think they're a little too costly, but it also depends on the type of buyer that you're working with.
Sure.
Somebody
Yeah.
who's got a lot of assets and a lot of disposable income may not need a bridge loan.
Yeah.
That's one of the highest transactions that I ever had was utilizing a bridge loan.
Oh yeah, that's right.
Yeah, that's pretty cool.
So it depends on and we're going to ask a lot of those preliminary questions when we first sit down with a seller that is looking to do both.
Like what would be
conjunction.
best? Yeah, best option, best.
And I've learned too that somebody like you're saying that a higher priced home, and they've got the assets, but that's kind of that's like their baby. They don't really want to touch it. And if there's a way to get around that, most of them say yes.
Yeah.
And in my experience, most of them say yes.
What about minimum credit score for a bridge loan?
680. And actually, I can go lower than that. I just need to ask the boss.
There you go.
Sure.
There you go.
Took the next question right out of my mouth. Yeah. I was just gonna ask what are kind of the like baseline guidelines.
I've done a 640 bridge loan. That's the lowest I've done. But their LTV, they didn't borrow a ton. They went up to I think it was 60% LTV.
Sure.
They just didn't need it.
Yep.
So when they go into their permanent loan, is it a conventional loan?
Whatever they pick. Conventional 30 year.
Because you can go into a VA. The one we did was a VA.
Yeah, exactly. We did a bridge on his house he was selling, then a VA loan on the new house. Yep.
That's awesome.
So how does that transition happen? I guess that's my biggest curiosity. So once the bridge loan has done the work that it needs to do, and you're actually in the home. So talking what you just said about going to conventional or VA, how do you transfer to a different loan?
All right, here your old house, bridge loan,
right?
Separate mortgage. New house, VA loan, separate mortgage, its own thing.
Got it. Okay.
Own deeds,
simple.
own title reports, everything. It's all separate. Yeah.
Okay. Cool.
Interest rates on a bridge loan. How much do they differ from? Now again, rates can be different for a lot of different factors. So I'm not like.
So no, you're fine. So we actually just updated how our bridge loans, as far as the term goes. So previously it was a 15-year interest only payment, right? If you had to make one. Well, because of the market and needing people to qualify more for this, we changed it to a 30 years. So it's a 4.25% interest only payment, 30-year note. Do the math on that, and it's the payment is so tiny.
Right,
it's super tiny.
Yeah.
When you also have a product that's a 10-year arm, is that correct?
Yes.
That you can do with a bridge loan. So the benefit that I see, most people don't stay in homes for more than 10 years. That's number one.
Yep.
And that's the only reason I would maybe consider a 10-year arm, because a 10-year arm adjusts at year 10, it can go up. So if you get it at 4%,
I've got a 10-year arm with 5% down, no PMI to 2.625% rate.
Wow.
Yeah. I'm actually doing more of those than I am 30 years because of that.
Yeah. Well, and you can always refinance, you can always sell it.
Sure.
But that's pretty impressive.
Yeah.
That's a really good product.
Yeah, I like that one. Every time I price it out, I just
grin.
I do grin.
Wow. You have any other questions, Tony, that you can think of? I'm just kind of going off the cuff here today.
No, man, this has been good. Like, it's another one. I mean, similar to our episode 4 that we did with the investment side of things. Like, this will be one that I go back and re-listen to. Yeah, because I've got folks that I'm trying to help out that are kind of in that limbo. I mean, it's like typical of what we see in this market now. The folks that do want to sell, need to buy another home, they're going to wait. They're scared to do it because there's not inventory out there.
And the fact of not having to move twice.
Right.
Is a big thing too.
Yeah, sure.
And I did watch
point.
I did watch your all's first one about, the in-laws. Most people don't have in-laws they like. I mean, there's,
I mean, the reality, it's there.
Well, I keep coming, like, Tony, this is something that you could take advantage of. We're not going to get into the specifics of that, but
sure,
dude, this would actually be perfect, like, in the next year or two. If you make a move.
Yeah.
Especially after some of the things he's talked about.
There are plans in progress that we're trying to figure out. Yeah. Yeah, it's really good, man. So really insightful. Yeah, I don't have any other questions other than I know we had talked a little bit before we got in here on the topic of cryptocurrency.
Ooh.
Hey,
Okay.
oh, a
This
little bit of
guy-
fire there, huh? Yeah.
I should have been talking to this guy like 6 months ago about this. Instead,
Yeah.
I was listening to our mutual friend Jeremy Byers and his temperature on the market, and it was, sell.
And look, we don't have to get into a deep like rabbit hole dive on this thing. Like I'm not thinking Alice in Wonderland or anything like that. Like just what would be if you had 2 minutes to talk about crypto. If somebody's deciding whether or not to get into it, what would you say to them?
Disclaimer: this is not financial advice.
This is not financial
this is,
advice.
this is
Yes,
not
this is
financial
just
advice.
3 dudes just talking about cryptocurrency.
2 minutes, huh? Well, like
I mean,
everyone,
you can
like everyone
like
says,
4. So
well, yeah, like everyone says. I mean, obviously, do your own research because you don't want to, tell somebody something, and then they do it, and then it just backfires. But
Right.
just find something that interests you. Like, let's say you're into sports. Okay, find a cryptocurrency that's what they're doing. They're trying to, let's say, make esports better.
Mm.
Or sports betting, for instance, something that ties to something you like. Okay.
Sure.
That way it's easier for you to understand because cryptocurrency is extremely confusing to someone who has no idea what it is.
That would be me. Yeah.
So, I would just find a project that actually has something that you're interested in. That would be my number one advice.
That's cool.
Yep.
That's cool. Yeah, because I just put like $10 on Dogecoin and I just keep watching it tank.
what is that now?
And tank.
I haven't looked at it. In a
Like
while.
7 something.
And now it's at 25 cents still.
Oh, is it?
I looked at it.
Okay.
Earlier.
Okay.
Yeah.
All right. Well, I feel a little better about it then.
It was at 70.
Yeah. Yeah. Yeah.
I bought into it when it was 0.007, and I had like 144,000 shares.
Question.
At one point.
But it sounds like you sold it.
I did.
You did.
Yeah.
Yeah.
You still got your Ethereum?
No,
Gone.
I can't do it.
Yeah.
I'm like, I'm sticking to investing in houses. That's what I know. That's what I like. I understand it. I don't really have my head wrapped around, crypto.
Yep.
And it's probably something that's going to take off. I feel like that. I mean, obviously Bitcoin already has, but
Sure.
Dustin and I were talking one point. I think like only 5 to 10% of the world has even adopted it.
Yeah, it's maybe not even 5.
Yeah. So
Yeah.
I mean, you think
It's
about
low.
that. Like when our parents and some of our grandparents and the younger generation over the next 20 to 30 years, I mean, it could skyrocket.
We just need Elon Musk to keep tweeting about it. Apparently, I mean, it's
No, he ruins it. He ruins everything.
every time. Every time.
He's cost me a lot of what if money. That's for
Oh,
sure.
Come on,
Yeah.
Musk. We should have him on the podcast sometime. Talk to him about that.
I mean, I can wear a mask.
Right.
What, dude, I wanted to touch on this a little bit too, because not many people, well, obviously you guys are everywhere in the city. I'm seeing more now.
Mm-hmm.
But tell us a little bit about Liberty Financial, just like the company.
Well, when I started there in December of 2012, we were strictly just a mortgage company. Your correspondent lenders, I'm sure you guys know those. They sell their loans, right? They don't have their actual own money to lend, per se. So been around since I think 2002 is when they started. But kind of what happened is that, we're taking over the markets in Owensboro. We had a huge market share. I mean, almost 20%.
Oh, wow.
We were doing they were doing almost 20% of Owensboro's business.
Wow.
And then Louisville and just surrounding counties in different states. And, ETFCU, which is credit union out of Indiana, they noticed, right? And they were getting bigger and bigger. Problem for them is they couldn't do the secondary market lending. They couldn't do government loans, anything like that. And then we didn't have all the portfolio products, hence bridge loan.
Right.
And we just decided, decided, basically, let's take over the world essentially. And that's what happened, almost 4 years ago. And the day that opened up where I got all these nice new toys of different loans that I'd never heard of before, it changed my life. And since that happened, we went from, I think, ETFCU was ranked, I want to say out of the top 100 credit unions. And we're now 8th in the United States.
Wow.
That's
Yeah.
amazing. Yeah.
which is weird to think because
That's a quick.
it doesn't make sense to me. But
Yeah.
in Indiana, that's their name. We kept our name in every other state we're in,
Wow.
and that's not going to change.
So you do banking and all that other kind of stuff as well?
I mean, I'll tell you an example of a benefit that I can help people with is I don't do the retail banking. I don't do auto loans and all that stuff. I'm strictly mortgages, but I was, pre-approving somebody in Northern Kentucky this morning. I just saw their auto loans. I was like, man, those payments are awful. So I screenshot, sent to the retail guy, right across the hall from me, essentially in the bank. And he's like, oh, wow, I could save them a ton of money, which then helps them get the house they want because I just freed up $400 for them.
Gee whiz.
Yeah.
That's crazy. Yeah.
It took me 3 minutes to get that answer.
That's great.
Yeah.
So then when I sent them back, I was like, hey, I'll be able to pre-approve you and all this stuff, but how about, do you guys want to do this too? I got a yes within 30 seconds.
Oh, sure.
Yeah.
Yeah. Wow.
So that's another thing I'll be able to benefit is, the behind the scenes things of trying to free up someone's other debt to help them qualify.
Right.
Cool.
Right.
Yep.
Tony, give us a recap of everything you just learned. I'm
wow.
teasing.
Yeah.
I'm
So
teasing.
I learned
I'm
that bridge loans are a good option.
No,
Sounds
they
like
really
a very
are.
good option.
No,
Yeah.
they really are.
Yeah. So, yeah, I mean, this has been super helpful, man. I appreciate your time today. Sounds like that.
I appreciate the invite.
Yeah. I mean, if anybody needs to get in touch with someone of your caliber to talk about these things, how can they get in touch with Dustin?
Honestly, if you just Google my name,
Yep.
I'm the only person in the world with my name. I've
Mistelske?
actually tried to find another Dustin Mistelske, and they don't exist.
Not happening.
No,
Yeah.
they literally don't exist. You just Google me. I'm the only person.
Is that Russian?
Mistelske?
It is Polish.
Polish.
Actually. Yeah.
I've heard my name's Polish. I still haven't
Hoagland.
I don't know.
I don't know, man.
I don't know. That sounds American to me.
Yeah,
It
Hoagland.
does.
There's nothing.
You got such an American name, man.
Oh,
Matthew
God.
Hoagland.
Maybe so. Yeah, Dustin, just to kind of recap what he said, man, just thank you for joining us. If anybody, again, this is an option that we can utilize when helping you to sell and buy.
For sure.
We actually have a client right now that we just got to find the house, but they're already, ready to go. They've got some equity in their home, and it's actually a really good program because they are for sure. We are not selling this house until we buy one,
Mm-hmm.
and we're not going to rush 3 days to move. Which that's really the beauty of this program.
Yeah.
Is that you can buy your new house, have a week, 2 weeks, 3 weeks, whatever you need.
Sure.
Move, get your stuff out, not be rushed.
Be able to breathe.
Yeah.
Yeah.
And if you've got kids, oh my gosh, that 3 days sounds
3
horrific.
days is, yeah.
It's just,
oh my
no.
gosh, man. It's like 3 minutes
Oh yeah.
when you got kids.
Yep.
Yeah. It's crazy.
Good deal, brother. Hey, Tony, thank you all for the birthday wishes. Close.
Yeah, happy birthday to Matt Hoagland. And yeah, Dustin, thanks again, man. You bridged the gap of my ignorance from absolutely ignorant to not
Give me
as ignorant as I was when I got in here. So appreciate the info. Yeah, any questions about that, please feel free to reach out to Dustin, and appreciate you guys tuning in for another episode of Real Life and Real Estate. Hey, we're still looking for some thumbs up, some reviews, some subscribes on the YouTube channel. So just find us anywhere. We're all over the place. Real Life and Real Estate Podcast. Give us a follow. Give us some feedback. Help us to know what's been helpful and not, so that we can do better for you. Until next time, peace out.
Adios.